on Intel. Let me bring in now Apjit Walia, senior semiconductor analyst with RBC Capital Markets in our studio. Good to have you with us, sir.
Thanks for having me, sir.
I know the news is just breaking as you sat down, but let's talk a little about Intel. Company talking about fourth quarter gross margins of 63%. Obviously, the market is reacting negatively to what we're hearing. How do you see the situation at Intel right now?
I think the CapEx news is what people got concerned. They brought the CapEx numbers down. But I think in terms of reiterating numbers, I think that's fairly conservative. We obviously turned bullish the name in October. We felt that there was so much negativity. I think the last couple of weeks, there's been too much positivity. People got too excited. We did an update on Monday saying they probably reiterate numbers, and they've done exactly that today. I believe they're setting the bar relatively low. They'll come and beat this in January. And I think what it does is you provide a little bit of short-term volatility in the name. And this pullback, I believe, is an excellent buying opportunity for the stock. I think at these levels and around these levels, the volatility we'll see the next couple of weeks will provide a good launching pad into Q1. The Q1 numbers we're seeing for the March quarter for Intel at this point, given Apple, given Napa taking off, given the Lakeport transition, all seem to be tracking above seasonality. I mean, that's the key point. If the March quarter tracks above the down 5%, which Intel typically does and what Street is right now, and I believe it's tracking somewhere down 2 to 3%.
Right.
That makes the stock very attractive at these levels.
But at this point, they're talking about capital spending below the midpoint of the prior view. What's behind that decline in the capital spending? You're talking about all these catalysts that's, in fact, going to increase capital spending. They're out with news right now saying capital spending is coming in below the midpoint of their prior view.
I think Intel's capital spending data is more relevant to some of the capital spending guys like AMAT and KLASE. But for Intel itself, capital spending is, I mean, they move it up and down a lot. I mean, they come back and raise 06 significantly. So I don't pay much attention to their CapEx plans as much as to what their end demand is. And I think that's what's really important. Capital spending overall, in my opinion, when it's less, is usually positive for the space because you're essentially looking at too much capacity coming online. That's usually a negative sign. Right now, what we're seeing overall in the semi space itself is a very tight, especially back-end capacity. That itself is a usually positive backdrop. If you remember the 90s, there was usually good demand and tight capacity. We're almost in an environment like the 90s right now, which is it's essentially a decade-old situation repeated again, which puts us in a very good backdrop for the next couple of quarters.
Jim, having said that, clearly a real significant reaction from the market's perspective is concerned, down $1.15 right now on Intel.
Yeah, I was just going to ask Apjit, if you're looking at this, many companies and many analysts were worried that Intel was so reliant on the PC, looking for some way to diversify the revenue stream. With revenues missing what people thought would be sort of an updated, upgraded midpoint range on the guidance, are you concerned, Apjit, that maybe Intel is sort of working itself into a revenue corner and not able to break out of anything beyond the PCs? And we've seen weakness from the likes of Dell and others. Is there a concern that maybe this company is not adapting quickly enough?
I think that's a good point. I mean, long-term, Intel obviously has a problem. I mean, we have a sector performer in the name. We've continued to recommend it as a neutral rating long-term. I believe Intel is becoming, and it's ironic to say this, becoming a trading stock. If you actually look just at last year, just do an exercise, if you bought Intel last year, say a year and a half ago, a year ago, you'd be up 15, 20%. But if you actually played Intel, just traded it from a $20 as a bottom 27, you're looking at an 80% return. I mean, this is a Dow component trading up and down. So I agree with you that long-term Intel has a PC-related issue, and until it goes and buys communications companies, it's not going to change that. But given the near-term strength we're seeing in a lot of the PC data points coming out of the motherboard data, and especially the data coming out of Asia. I mean, Asia right now is on fire, and I think the notebook growth coming out of there itself, I think that this current guidance of the 10.5 will be beaten in January, and I believe their March quarter guidance, if obviously nothing changes from now and then, will also be fairly bullish.
$10.5 billion in revenue. Abjit, good to have you with us. Thanks very much. Apjit Walia and Jim Goldman on Intel, and clearly